Okay, we are told to prepare an income statement, taking into account the adjustment information below, complete the income statement. We are told that the year end as 30 June 2019. Okay, we are given the sales. They are 4,250,000. The cost of sales 2,000, 2,000,000, 100,000. And then the debtors allowances. You know that your debtors allowances they decreases your sales. So let's go 18,000. And then number two, number one. Let's go to adjustments. Adjustment number one, goods are sold at a markup of 50% on cost. A credit note for 12,000 was issued to a debtor for merchandise returned. They were totally damaged. Obviously, your trading stock is not going to be affected, and also your cost of sales is not going to be affected because this merchandise has already been damaged. So there is not going to be affected. The trading stock is not going to be affected, and also the cost of sales. Okay, so the credit note of how much? 12,000. That is a debtor's allowances. So let's go to our income statement. Debtor's allowances, we know that they decreases your sales count. So what is the answer? I'm going to calculate that. So it's 4,220,000. And then nothing was affecting your cost of sales is 2,900,000. So this minus this is going to be 1,428,000. Okay, so we are given this. Let's go and find other incomes. So the income that we have here is the rent income, 200,700. Rent income, 200,700. Okay, let's go and check if there's an adjustment that is talking about the rent income. If there is an adjustment that is talking about the rent income. Rent income was increased by 900,000, meant by 900 on 1 March 2019. The tenant has not yet paid the rent for June 2019. So this means that now we have an accrued income here. Okay. Let's go. So the rent income, it's how much? It's 200,000. This is your rent income, 200,700. And that's 200,700. It is for 11 months. But we are told that the rent was increased by 900 on 1 March. This means that this 900 is from March, April, May, for 3 months, because on June we are told that the rent has not yet been paid. So we are going to say 900, we are going to say 900 times 3. So 900 times 3 It's 2,700. The answer is 2,700. So we're going to minus that 2,700 so that we're going to guess that how much was the rent income before it was increased per month. So we're going to minus that 2,700 from 200,700 so that we're going to know how much was the rent income before that 900 was added. Remember that this 900 has been added from March, April for 3 months. So the answer is 198,000, and that rent is for 11 months. Divided by 11 months. 198,000 divided by 11 is 18,000. So now we're going to say plus 900 because we are looking for a rent for June. So now we know that a month before that S900 was added, it is 18,000. Now we know that the rent for June, S must have that 900 added because the rent was increased on March, so it's going to have that 900 added for June. So the answer is 18,900. So we're going to say plus 18,900. Okay, let's go back. Check if we have anything that is affecting the incomes. We have the bad debts recovered of 1,800. Bad debts recovered 1,800. Now let's go to the adjustment to check if there's anything that is affecting your bad debts recovered. So obviously in number 2, there's nothing affecting. Also in number 3, this one is talking about the drawings. And also in number 4. And then number 5, the following entries appeared in the June bank statement but had not yet been recorded in the books of business. Number 1, we have bank charges. Number 2, a direct deposit by a debtor whose debts had been previously written off as bad. 1,200. That is a bad debt recovered. So let's go. That is your bad debts recovered. Let's go. It's how much? It's 1,200. So we have a new bad debt recovered of 1,200. So we are going to say 200,700 plus 18,900 is equal to 219,600. And then the bad debt it's 3,000. So now we have to add the incomes. So it's 219,600 plus 3,000 plus 2,400 plus 149,600. The answer is 374,600. So we're going to plus the incomes with your gross profit. The answer is 1,802,600. Now let's go to the incomes. Let's go to the expenses. The expenses. What are your expenses here? Let's go Just repeating expenses. Okay, we already have the salaries and wages, rates, taxes, and discount allowed. Okay, let's just go straight to adjustment and find anything that is affecting your expenses. Okay, this one, number one, credit notes. So this one is not affecting. Number three, loan to the store for personal use at a cost price 4,800. So Lolo is an owner of this business. So if she is taking the trading stock, the stock, this means that your trading stock has to decrease, right? This means that your trading stock has to decrease. So now let's look at this. The trading stock that we have is 418,400. So if we decrease it by this 4,800, and then you come and look at the trading stock on number four, which is on hand, we can see that still, even if we subtract that 4,800 from that 418,400, still we are going to have a trading stock deficit. So let's go to the expenses. So the trading stock is 418,400. We have a trading stock deficit here. So we have a trading stock deficit. Okay. So the trading stock is 418,400. Trading stock 418,400 minus 4,800. And then now we have to minus the stock that is on hand. Remember, the reason we are separating this 4,800, the one that was taken by the owner, is because if the owner take a trading stock as the personal use, this means that your trading stock is going to decrease. It is why we decrease it by 4,800. And then the trading stock that is there, this is on hand, is 406,100. So minus 406,100. So what is the answer? 418,100 minus 4,800 minus 406,100. The answer is 7,500. Okay, let's go back to the questions. Okay, number four. Trading stock reveals that the following were on hand. So we already dealt with this one. The trading stock on hand, the deficit. Now we have a stationery. So let's check our stationery. Here, the stationery is 2,100. Stationery expense it's 2,100. Now we are told that there is a stationery on hand. Stationery on hand of 500. So if there is a stationery on hand, that stationery is unused. So once a stationery is unused, it means that we have to treat it as an asset. So you have to go to your stationery expense and subtract that 500 because this 500 is no longer an expense because now it is unused. So if it's unused, it means that the business can sell this one. So this stationery is an asset. So let's go and subtract the stationery. Minus 500. So 2,100 minus 500, it's 1,600. And then we have the consumable stores. How much were the consumable stores? They were 4,000 rand. So we have the consumable stores. So the consumable stores were 4,000 rand. And then we have a consumable stores, it is on hand, so we have to go and subtract it because it is no longer an expense. So 4,000 minus 600. We have the consumable stocks on hand, which is 800 rand. So we have to go and subtract it. So it is here. It's 3,200. Okay, let's go. Number 5. The following entries appeared in the bank statement but had not been yet recorded in the books of the business. Number 1 is the bank charges. The bank charges in a trial balance, you can see they are 1,200. We have the bank charges, they are 1,200. And then we have the ones that are coming from a bank statement for June. They are 1,000 rand. So let's go and record them. So the answer is going to be 2,200. Then we continue. Number 6. A debtor C. Coward had been declared insolvent. He owes 1,500. His insolvent state will pay 60 cents and rand, and the balance must be written off as irrecoverable. Okay. How much do we have for bad debts? The bad debts that we have is 3,600. We have the bad debts. So now we have the new bad debts. But let's look at this first. So we are told that his estate is 60%. This means that 40% will be written off. So he owes how much? 1,500. So we need to calculate that 40%. So 1,500 times that 40% is equal to 600. So it's how much is 600 rand. So 2,800 plus 600. The answer is 4,400. Let's continue. We have the outstanding entry. We have the insurance premium of 5,600. Insurance premium. Let's check. We have the insurance, which is a 12,000 rand, 12,100 insurance. Okay. Insurance, 12,100. Okay, we are told that an insurance premium of 5,600 was paid on 1 April 2019 for the period of 1 April 2019 to 31 October 2019. Okay, so now what do we have to do? An insurance premium was paid in 1 April 2019 for a period of 1. So April, March, April, May, June, July, August, September, October. That insurance premium is for 7 months, but it was paid on 1 April. So our years end on the end is dated June. The year end on dated June. So it's April, May, June, 3 months. So this means that the only insurance that's belong for this month is for 3 months. And then the other 4 months is a prepaid. So we need to calculate this prepaid expense. So remember it's April, May, June, July, August, September, October, 7 months. So sum 5,600 our premium insurance. Okay, let's calculate it. It's 5,600 times. We are looking for that 4 months. So 5,600 times 4 divided by 7. The answer is 3,200. So we have to go and subtract that 3,200. So 2,000. Okay, let's go and check our insurance from the trial balance. It's 12,100. The insurance is 12,100, not 12,000. Okay. The insurance is 12,100. So 12,100 minus 2,200. The other is 8,900. Let's continue. This is an interest on loan. We have depreciation for the year is 195 and 50. 195 and 50. Note, we don't have a depreciation in a trial balance. So this is why I'm writing that balance. And then we have a telephone account. How much is the telephone in the trial balance? It's 9,000 rand. Telephone is 9,000 and telephone. The telephone is 9,000 rand. So the telephone, we are told that the telephone is 9,000 rand. Okay, let's go back to that question. Let's go back to that question. Telephone account for June has not yet been paid. It's how much? 1,600. So we have to go and edit 1,600. So 9,000 plus 1,600 is 10,600. Now let's calculate the operating expenses. So 10,600 plus 195, 150 plus 8,500 plus 4,400 plus 2,200 plus 1,200 plus 1,600 plus 7.5 plus 100 plus 150 plus 18,000 plus 478 is 116,000. The answer is 816,600. So now let's go. So the answer is 186,000. If you minus your gross operating income minus operating expenses is 986,000. And then now we have the interest expense, the interest income, not the interest expense. So it's the interest income. Let's go and check in the trial balance if we have the interest income. Yes, we have the interest on fixed deposits. It's a 9,000 rand. Let's go and record it. 9,000 rand. Okay, let's go again and check. What are the adjustments saying about the interest on fixed deposits? Outstanding interest on fixed deposits must be taken into account. The fixed deposit was invested on 1 October 2018. Interest on fixed deposit is not capitalized. It was invested on 1 October 2018. So the year end at 30 June 2019. This means that this fixed deposit stayed from October, November, December, January, February, March, April, May, June. 9 months. Okay, for 9 months, let's go and check it. Fixed deposit is 200,000 at 8%. Fixed deposit is 200,000 times 8% times 9 over 12. 200,000 times 8% times 9 by 12. The answer is 12,000. That is your interest income. Is the interest on fixed deposit. It's 12,000. This means that it was outstanding by how much? By 3,000 rand. So we're going to see 986,000 plus 12,000 is equal to 198,000. And then the interest expense, let's go and check in your trial balance. In your trial balance, do we have the interest expense? Do we have the interest expense in the trial balance? Do we have the interest expense? It seems like we only have the interest on loan. On number 10, the loan statement from BM Bank of the region reflects the following. Okay, balance on 1 June 2018 is 665,600. Okay, let me do this. So this is going to understand how to calculate interest when it is capitalized. So that we're going to understand how to calculate it when it is capitalized. Okay, the opening balance on 1 July 2018, 665 cents. It's 665 cents. And then the closing balance. The closing balance. What is the closing balance? The closing balance 652. 652,000. Total payments including interest is 103, 200. Okay, 103, 200, 200. Okay. Okay, let's subtract an opening balance minus the closing balance minus. What is the answer? Opening balance minus the closing balance. So 665,600 minus 32. The answer is the answer is 18,600. This is the amount it was paid. So if this is the amount it was paid, so how much is the interest? Because this is the total, this is including the interest. So to find the interest, I'm going to say total including the interest minus this amount. So 103,200 minus 18,200. 103,200 minus 18,600. Then now you've got your interest. The interest is equal to 89,000 600. This is your interest. It's 89,600. We are subtracting it. So 998,000 minus 89,600. The answer is 910 is 1,400. Then this means that we are done with the interest, with the income statement, because this one, number 13, the owner invested a further 100,000 in the business to increase equity contribution. This one does not affect the income statement. So we are done with the income statement. Thank you.